How MrBeast actually makes money beyond YouTube. We break down the economics hype videos leave out, revenue streams, hidden costs, and realistic operator constraints for MrBeast-style creator empires. Illustrative estimates only, not financial, legal, tax, or investment advice. MrBeast, Jimmy Donaldson, runs a media company that generates audience through high-production YouTube videos, then converts that audience into product and licensing revenue, most visibly Feastables, a chocolate and snack brand launched in 2022 that competes on retail shelves against Hershey's and Mars. The YouTube channel functions as the marketing engine, manufacturing, retail distribution, and brand licensing are separate operating businesses layered on top. Publicly reported structures describe multiple interconnected entities, the production company, Feastables, and prior ventures like MrBeast Burger, each with its own P&L, not a single creator paycheck. MrBeast's operation reportedly spans multiple legal entities, his production company, Feastables, and past ventures like MrBeast Burger, each functioning as its own business with separate manufacturing, staffing, and margin structures rather than one undifferentiated YouTube income. The channel's format, giving away large cash prizes, expensive challenges, elaborate sets, functions as a customer acquisition engine for the product businesses. Audience trust built through content is the actual asset being monetized through Feastables and brand deals, not the ad revenue itself. Feastables directly competes with legacy confectionery brands on the same retail shelves, which means it inherits their cost structure, slotting fees paid to retailers for shelf space, promotional discounting to win trial, and the working capital demands of a physical CPG supply chain, costs a pure content business never faces. Before evaluating income potential, identify who pays, for what outcome, and why they choose this provider over alternatives. Feastables' retail revenue is the clearest product extension. Bars sell in Walmart, Target, and other major retailers at price points competing directly with established candy brands, with publicly reported retail expansion into thousands of stores. Beyond Feastables, revenue lines include YouTube ad share, commonly estimated as a minority of total income at this scale, in-video brand sponsorships, equity stakes in ventures he promotes, and the discontinued MrBeast Burger licensing deal with virtual kitchen operator Virtual Dining Concepts. Licensing and product revenue can carry higher margins than platform ads but require manufacturing, retail slotting fees, and distribution deals that take years to negotiate. None of it is just YouTube money. Publicly reported retail distribution has Feastables in thousands of stores including major national chains, competing on price and shelf placement against decades-old brands with far larger marketing budgets, a very different competitive fight than winning YouTube's algorithm. MrBeast Burger operated as a licensing arrangement with Virtual Dining Concepts, a ghost kitchen operator that fulfilled orders through existing restaurant kitchens under the MrBeast brand, illustrating how a creator can license a brand without operating the physical product, trading operational control for lower capital exposure. Sponsorship and brand deal pricing for a channel at this scale reportedly commands premium rates tied to view guarantees and audience demographics, but publicly available figures are partial disclosures. Commonly estimated ranges should be treated as directional, not a precise P&L. Compare gross revenue to net cash flow, they are not the same. Startup cost range, illustrative content, $100,000 to $3 million plus per video at MrBeast scale, product/licensing, $500,000 plus with manufacturing and retail partners. Publicly reported interviews describe per video production costs escalating from roughly hundreds of thousands of dollars in earlier years to several $1 million per video at current scale. Prize payouts, custom sets, travel, and a large crew are the biggest line items. Feastables and other CPG products carry their own cost structure, co-manufacturing, retail slotting fees paid to grocery chains, returns and spoilage, and marketing spent to compete against decades-old confectionery brands. MrBeast Burger's ghost kitchen licensing model kept capital exposure lower but transferred food quality control to Virtual Dining Concepts partner restaurants, a trade-off that became a liability. Margin pressure, ad revenue is a minority line at this scale. CPG/licensing carries higher upside but slotting fees, COGS, and returns compress margins. Owner labor is frequently the largest hidden cost. Value your time at a realistic hourly rate. Reported production costs have escalated significantly as the channel has grown. Early videos were commonly estimated in the tens of thousands of dollars, while recent interviews describe budgets reaching several $1 million for the most elaborate videos, driven by prize payouts, custom sets, and international travel. A large permanent staff, reportedly hundreds of employees across content production, Feastables operations, and business functions, represents a fixed payroll cost that dwarfs what a typical solo or small team creator carries, and that overhead exists whether or not any single video performs well. CPG products carry cost lines invisible to viewers: co-manufacturing agreements, food safety compliance, retail returns and spoilage allowances, and marketing spend required to win shelf space renewal, none of which scale down for a smaller creator trying to launch a similar product. The MrBeast burger brand faced a widely reported 2023 legal dispute between MrBeast and Virtual Dining Concepts alleging the food quality and rollout damaged his brand, illustrating that licensing revenue isn't passive once your name is attached to something you don't operate directly. Reported coverage on crew working conditions highlighted the operational strain of sustaining hundreds of staff and constant high-budget output. Most creators who try to copy the giveaway/build a product formula fail because they lack the capital reserves, existing audience scale, and negotiating leverage to land retail shelf space or manufacturing terms. The content format is copyable, the balance sheet behind it is not. Key failure points: licensing partner quality control risk, retail slotting costs, crew/production strain, capital and audience scale most creators can't replicate. Hype content optimizes for clicks, operators optimize for contribution margin and cash runway. The 2023 legal dispute between MrBeast and Virtual Dining Concepts over MrBeast Burger's food quality and rollout is a clear example of licensing risk. When you license your name to a partner's operations, their execution failures become your brand's reputational liability. Reported coverage on working conditions for MrBeast's production crew highlighted the human cost of sustaining a constant high-budget content cadence, a reminder that the visible product can obscure significant operational strain. Aspiring creators who copy the giveaway format without the capital reserves, existing audience, or negotiating leverage typically can't fund the prizes or production values that make the format work, and even fewer have the audience scale needed to interest a retailer or manufacturer in a licensing deal. Verdict on MrBeast-style creator empires: not a beginner model, instructive as a case study in creator-to-CPG scaling, not a replicable starter playbook. Startup cost: very high scalability, high automation, low risk, high beginner, case study only. Verdict: media-to-CPG empire, not a solo side hustle. Do the spreadsheet for your market. Run a small test before scaling. MrBeast's business demonstrates a real path from content to product company, but the path required years of audience building, personal capital risk, and infrastructure most creators will never have access to before attempting anything similar. Treat this as a case study in leverage and diversification, not a template. If you're early stage, focus on making the content business itself sustainable before considering any physical product extension. Subscribe to Money Machines for more hype versus reality breakdowns. Educational content only. Illustrative estimates. Not financial, legal, tax, or investment advice.